Welcome to Wealth Chapters, the channel where we break down the most powerful books on wealth, investing, and personal growth, one chapter at a time. Today, we're jumping into a huge topic that every investor thinks about. So, let's get right into it. We're diving into Chapter 6 of Benjamin Graham's legendary book, The Intelligent Investor. And we're tackling a question that, let's be honest, probably every single one of us has asked at some point. Can I actually beat the market? You know, that dream of getting returns that are way better than average. Well, Graham has a lot to say about it. And what's so interesting is that Graham doesn't just shoot down this idea. Not at all. In fact, he lays out a very specific and a challenging path for anyone who's willing to aim higher. But, and this is a big but, this is absolutely not some get-rich-quick scheme. No way. It's a deeply disciplined approach, but only for the truly serious investor.
Because, and this is really the heart of the whole chapter, that path comes with a price tag. The idea of getting higher returns for free, it's a fantasy. They demand something pretty significant in return. So the big question is, what is that price?
Okay, so Graham has a name for this type of person. He calls them the enterprising investor. And that word, enterprising, is chosen so carefully. It's not about being reckless or aggressive, and it's definitely not about just getting lucky. It's about being industrious, about being ready to roll up your sleeves and put in the real hard work.
So what does that actually look like in the real world? Well, it means you are actively committing your time, your energy, your brain power to managing your own investments. We're talking about a serious amount of effort, some really deep analysis, and just constant attention. This is pretty much the polar opposite of a passive, set it and forget it strategy.
And this is where Graham draws a really sharp line in the sand. He makes it crystal clear. Being enterprising is not the same thing as being a speculator. An enterprising investor, they follow a system. They do the deep analysis. They have clear standards. The speculator, on the other hand, they're just chasing trends, listening to the crowd, and making decisions based on emotion. See the difference? One is like running a business. The other is basically just gambling.
All right, so let's dig into that greater effort a bit more. What does it actually mean day to day? It's not just about spending more hours staring at stock charts until your eyes glaze over. It's much deeper than that. It's about a fundamental shift in how you see your role and your responsibility as an investor. Graham actually breaks this down into 4 key commitments. First up, deeper analysis. This means you're not just buying a company's name, you're becoming a detective, investigating its real financial health. Next, systematic decision-making. You have a set of rules, and you actually follow them, no excuses. Then there's continuous attention. Now, this doesn't mean obsessively checking your phone every 5 minutes, but it does mean regularly keeping an eye on your portfolio. And finally, ongoing review. You have to constantly ask yourself, does my original reason for buying this still make sense? And this is the big trade-off right here. If you're going to chase those higher returns, it means you are taking on 100% of the responsibility for the outcome. You can't blame the market. You can't blame a bad tip from your cousin. When you're the one doing the analysis and making the calls, well, the buck stops with you. It's all on you. But you know what? Just doing the work is only half the battle. The other half, and maybe the harder half, is having the right mindset to actually execute on your plan, consistently. This is what truly separates the successful investors from, well, everyone else. And frankly, it's where most people stumble. There's a quote from this chapter that just perfectly captures this idea. It goes, "Active investing requires restraint and consistency, not constant action." Think about that. It's not about being a hyperactive trader clicking buy and sell all day. It's about restraint. It's about patience. It's about having the discipline to stick to your plan even when it's, honestly, kind of boring. That consistency, that's the secret sauce. Because without that discipline, you're basically swinging the door wide open for all the enemies of good returns. Making decisions based on fear or greed, chasing after the latest hot stock everyone's talking about, investing without a clear set of rules. Graham is very clear. This is the fastest way to turn what could be a sound strategy into pure, unadulterated speculation. So after laying out this whole blueprint, Graham does something brilliant. He turns the question right back around to the reader, to you. Knowing what it really takes, all the work, the full responsibility, the intense discipline, you have to look in the mirror and ask, is this path actually for me? And this is where you have to be really honest with yourself. Are you genuinely prepared to put in that level of commitment? Not just for a week, but month after month, year after year. It's not a trick question. For a lot of people, maybe even most people, a simpler, more passive approach is absolutely the smarter choice. But for a select few, this is the exact challenge they've been searching for. Which brings us to the final and most crucial point of all.
The chance to get those higher returns, it's real. It's out there. But it demands a toll, a price that you have to pay. And that price is paid in the currency of effort, of deep analysis, and of just unwavering discipline. So the real question you have to leave with isn't just, can I do the work? It's, is the potential reward truly worth the price I'm going to have to pay?